Hi, my name is Tim Reed, founder of the Phoenix Group and PhoenixREI.com. Now today I'm going to talk about one of my favorite topics and a really timely one for our current situation going on right now. There's a lot of fear, uncertainty, and doubt in the marketplace because of the current pandemic we're facing, and I want to get real for a minute. People that have RRSP investments and 401ks in the US, the Roth IRAs, they might have just lost 30% of their retirement with the market shift that's happening. And if that market stays down and that wealth doesn't come back, who knows? It might come back. Stock market always does go back up over time. But what if you don't have a lot of time? What if you're a couple years away from retirement? What if? So I want to talk a little bit today about how most of these funds are structured. Most of them are done as mutual funds because they're meant to be passive, not active. There's people out there that are doing day trading and they have the ability to be active in the stock market. They could have made a ton of money over the last little while. I know friends of mine that are day traders and they have those skills that they're able to capitalize on that volatility and make money. But most investors and mere mortals like me that don't understand the stock market, like the Wolf of Wall Street did, aren't able to do that. And that's why mutual funds exist. That's why most people have their RSP and 401k investments in mutual funds. It's supposed to give diversity, and over the long term everything always goes up. But there are a lot of people that got caught in 2008, 2009. There are going to be people that are likely to get caught. I don't have a crystal ball in my back pocket. However, this could cause some damage to people's retirements, especially if they were really close to retiring right now. And the inventor of the modern hedge fund, Vanguard Capital, the owner of that company, said that actively traded funds, so mutual funds that are actively traded, they have to keep trading stocks, you incur brokerage fees every time you trade a stock. So those portfolio managers have to keep the percentages all balanced, and they have to rebalance the portfolio, and every time they trade a stock, just like the day traders do, they pay a fee to the brokerage. And those fees, as well as the management fees for the mutual fund, called the MER, that you see at the bottom in the fine print of your statement, you're paying them to manage your money. And that's fair. Everybody needs to get paid for their time. They've got armies of day traders doing their best to make this thing work for you over time. However, the guy who created the modern hedge fund said that over a 25-year period, over 60% of your wealth in an actively traded fund, between the combination of those two things, can be eradicated by those fees. And that is a pretty scary thing to think about. And I'm not meant to put fear out there. It's just one of the things to consider, active versus passive in any of your investments, whether it's real estate, businesses, stocks. If you're not actively participating in how your portfolio is doing, then there could be some consequences and challenges for that. So I want to suggest another option for your RSPs and your 401ks that you could look at doing mortgages. You have to self-direct your investments and put them with a trust company. And by all means, reach out to us, click the contact button on our page, and we can give you more detail on that. But have you ever thought, what if I could be like the bank? Why do they have all this money? How do they get it in the first place? Is one of the major things they do is they lend money on real estate, and they charge interest. They lend money in real estate, they collect interest. That's basically their business model. Super simple, and that's how they make their money. And if you've ever thought, please forgive my artistry, I'm an engineer by background, not an artist. If you've ever thought about being the bank, and you know all those pesky fees that you hate getting pulled out of your bank account every month, you use an ATM card, they charge you a fee, they charge you a fee, they charge you a fee. That's one of the ways the bank makes a ton of money. And you can lend your RRSP funds and your 401ks on real estate as a mortgage. This is a mortgage right here. On first position, just like the bank, and second position mortgages as well. And in a first position, I'm not quoting rates, this is just for education purposes only, then you can get 10% as an example on a first mortgage on your investments, and you can get 12% or greater, and in every case you get to charge a fee just like the bank. If I'm a borrower and you're a private lender and I borrow money from you, you're going to ding me with a fee. Plus I'm going to pay the legal fees, plus I'm going to pay the appraisal if you want me to get one, plus I pay everything. It's all on me, just like the bank. Just like the bank. You get to be in the driver's seat of your investments. You get to think like a banker and say, what kind of interest do I want to charge? What kind of fee do I want to charge? And when I talk about the velocity of money, this is how professional lenders that lend on real estate, make all of their money is based on fees. They want to turn that mortgage over again and again because boom, a fee, boom, a fee, boom, a fee. And that fee on a mortgage, hundreds of thousands of dollars, that could be tens of thousands of dollars you're charging as a fee every time, which makes your interest rate on an annual basis even higher, which is really exciting. That's one of the things that I love showing people how to do. There's trillions and trillions of dollars in RRSPs and 401ks sitting there in these mutual funds, not giving people a return they're happy with. I always challenge people that I work with, go down to a mall, not right now because of social distancing, but go to a mall. If you weren't going to be thought to be crazy, if you asked 10 people, stopped them in the mall and said, hey, last time you got your mutual fund statement at the end of the year, how happy were you with the return? I bet more often than not, out of 10 people, more than half are going to say they're not too happy with it. And there has to be a better way. People don't know often that this is the alternative because the bank doesn't tell you this. Because guess what? The bank sells mutual funds. So it would be taking money out of their pocket if they told you this was possible. It's in direct competition with their interests. So they're never going to tell you that. RRSP lending on real estate is unfortunately kind of a secret in Canada and in the US. A lot of people don't know they can do this stuff. And done properly with the right assistance, then you can make well above the returns most people see that statement they're not happy with. You get to pick the return you want. You're secured against real estate. Your investment's safe. It's backed against a real asset. There's risks in everything. There's risks in mutual funds. There's risks in mortgage lending. I'm not going to say there aren't because there's risks in every investing. And the biggest risk is doing nothing. Is keeping your investments totally passive, not managing them, not looking at what options you might have. That's the biggest risk. And having your money all in cash, that's a risk too because inflation is going to devalue your money over time. If it's not moving, it's dying. Your money needs to work hard for you, not you work hard for your money. And that's how the banks do it. That's how you should do it too. Think about being the bank, RSP lending your 401ks, TFSAs, RSPs. Think about diversifying some of that out of your mutual funds. So you're backed by a real asset, bricks and mortar. You can drive by, you can kick it, it's real. You can sleep better at night knowing you're getting a return that doesn't vary. This doesn't go up and down. They pay this every month, month after month after month, just like you do paying your mortgage to the bank that you currently have. My name's Tim Reed. Thank you very much for listening. Respect the hustle, everybody. Look forward to seeing you in the next video.